Okay, ladies and gentlemen, welcome to today's session. On today's session, we're gonna be focusing on change of market character, which is mainly known as what? It's mainly known as CHORCH, change of market character. I think that's the abbreviation of everything. You understand? So, what is change of market character? You understand? Change of market character occurs when the market switches from trend to trend using a unique and specific and a certain structure. You understand? So which means there's a certain structure that was designed to help you do what, to help you understand when the market do what, it switches its character from one place to another. You understand? So the term character means trend. You understand? A change of market trend, which means it's switching from, as you can see here, that okay, I wrote here that okay, when a trend, okay, from what trend to what trend, from an uptrend to a downtrend, and then from a downtrend to an uptrend. You understand? So that's where the market moves. That's where the change of the market happens. So the question now that you should ask yourself that okay, now we know that okay, the market is going to mainly change its character from one place to another. Where do we find it? You understand? Where do we find those specific zones where we should look for change of market character? A change of market character on an uptrend can always be found where? On higher highs and then higher lows. So which means those zones mostly look for change of market character within those zones. And then don't worry about that. I'll explain everything in terms of like explaining and I'm showing you how you find those zones. And then on a downtrend, you're gonna find them on your lower lows and lower highs. And then the last point, when the market hits your, what do you call this thing, your order block, when the market hits your order block at this level here, we have something called confirmation entry point. Confirmation entry point, we mainly see it as what? As a charge. The market needs to switch from a certain trend to a certain trend. Do you understand? So we're gonna also talk about that when time goes on. And then the question now is that okay, what causes charge? What causes the market to switch its trend from one trend? So a charge is caused by a failure of respecting a trend rule. Instead, there is a chapter where in my course where I speak about what a trend having what? A property and a rule. A trend needs to have a property and a rule. And then, like I said, failure of respecting those trends can cause what? Certain consequences. So this is what we need to expect after the market fails to do what? To respect our trend. You understand? A change of market character, which means there is a possibility of the market doing what? Switching from the current trend to a certain trend. You understand? And then the other way of you understanding that okay, what causes change is that okay, once the market fails to respect your order block, mainly when the market fails to respect your order block, know that okay, we might start switching our trend from one place to another. So now let's say that okay, the market creates a chart, it fails to respect an order block. So there is a certain zone that it needs to go to confirm to us that okay, it's gonna move on, it's gonna switch from that trend to another trend. What if the market doesn't do that? What if the market breaks that zone and continue pushing up? So the things that you can expect, the answers, I think from my point of view, what I've seen so far is that okay, the reason why the market would do that is because of what? We have a strong momentum of the current trend that we're introduced to, which means it fails to switch that trend that we are currently into another trend. You understand? The momentum, let's say the buying momentum is too strong or the selling momentum is too strong. You understand? And sometimes we're gonna find ourselves being in a position where we are focusing on the minor change of market character instead of the major one. So you can find yourself having the minor change of market character where the market breaks it, and then afterwards it goes and do what? It creates a major change of market character. Then it starts doing what? It starts moving by your direction. You understand? So now let's go see those structures that I'm talking about. So here we have what? We have the two structures. You understand? So within these structures, as you can see directly, here the market switches from an uptrend to a downtrend. So we're switching from this uptrend to this downtrend here. And then at this level here, we can see directly we are switching from a downtrend to an uptrend. You understand? So now what happens here is that okay, I'll explain everything in properly, guys. I'll explain everything properly. So what happened within this level is that okay, look at this thing. The market comes on an uptrend, right? It creates a breakout of structure. It goes up to grab its liquidity, then it goes down. So there was an order block here. So as the market breaks that order block, that zone where the market broke that order block means that okay, we are currently on what? We might be switching our trend. You understand? So the market does what? It goes down and then goes up to a supply level. You understand? So this chart here, it's gonna act as a breakout of structure for what? It's gonna act as a breakout of structure for the trend that we're gonna be moving to. So which means we're gonna consider this guy as what? As a BOS. And then this will be our graph of liquidity. So the market will be simply going up. Since we're on a downtrend, we use supplies as our starting zone. The market will be going to our supply, and then it's gonna start giving us our beautiful cells. Understand? Which means that okay, if you have a structure like this, so it's a breakout of structure, a change of market character. So this change of market character can also be considered as what? A breakout of structure for a trend that's going to be moving to the downside. So the market needs to go up to do what? To respect its order block and then push to the downside afterwards. So I'm going to like do, like I said, a proper structure where I'm going to be helping you guys understand how you go about this thing. But then for now, this is how you need to understand this theory that again, a change of market character occurs when the market breaks what? It breaks this level. So technically on an uptrend, we know that again, the market breaks highs, it breaks our higher highs, you understand? And then the market respects our high lows, you understand? But then you can see that okay, this is the high low here. The market did what? It broke it, you understand? Which means now the market is no longer doing what? It's no longer respecting our rules. So if the market fails to respect our rules, what is our plan B? Our plan B is change of market character. The market might be changing its buying trend to a selling trend. Hope I'm making sense, ladies and gentlemen. I hope I'm making sense, ladies and gentlemen. So now let's talk about the downtrend one. As you can see, that the market comes pushing to the downside. It creates a higher low, a lower low. It creates a lower high, and then it creates a lower low. You understand? Once it creates this lower low here, the market gives us what? A breakout of structure, a graph of liquidity. The rule of a downtrend is that okay, we break lower lows, and then we respect lower highs. You understand? Which means our, what do you call this thing? Our demand levels, they are what? They are weak. And then our supply levels are what? They are strong. You understand? So now the market does what? It fails to respect, it fails to hold this supply here. This supply here, which means now the market is going to give us what? A change of market character. You understand? So once the market gives us what? A change of market character, what does this mean? This means that, okay, once it fails to respect, what do you call this thing? Our order block, it gives us a change of market character. So that change of market character means that okay, we might be doing what? We might be switching from a trend to a certain trend. You understand? As you can see that okay, this guy here, like I said, he can be considered as a breakout of structure of this high. You understand? So the market gives us what? Gives us sort of a BOS, and then this is the graph of liquidity. The market goes down to what? To respect its demand. So once it respects that demand, it needs to do what? It needs to push it the upside. So this breakout of structure is just a breakout of structure that shows us that okay, we are currently moving bullishly now. So the same thing with this guy here. Once you see this breakout of structure at this level, expecting the market to push it the upside, tap us, and then give us what? Our selling pressure afterwards. So this is how you go about understanding this thing. As you saw that okay, the market switched from an up to a down, and then from a down to an up. You understand? Using what? A change of market character. So now, since we saw everything, let's go and see that okay, if the market fails to do what you ask it to do, what will happen? So here we have what? We're gonna start with this one. We have failure of a charge, which means a failure of moving from what? From moving from an uptrend to a downtrend. Understand? It's a failure of what? Failure of a charge. So the market fails to give us what? A change of market character. Look what happens. The market creates a lower high, a high high, a high low, a high high, and then it breaks this high low, which means now we are on a charge. You understand? So we expected the market to do what? To come and respect that lower high, that zone there, that supply level, and then give us what? A push to the downside to break this guy here. That's when you can confirm that okay, we are on a strong charge. So look what the market does now. The market does what? The market respects our order block. It goes down, but never breaks this level here. And then it goes up. Once it goes up, this means that okay, our order block is what was not strong to hold the market, which means the buying pressure might be strong. You understand? So now the market breaks this level. Once it breaks this level, it creates what? It creates a breakout structure of the buying momentum. So look what it does. It grabs this liquidity and then goes down. Once it gets to the minor breakout structure at the zone here, what does the market bounces on the minor breakout structure? It goes up. Once it goes up, it creates liquidity. So the market takes out the liquidity by tapping into our order block and then pushing to the upside, which means now the bullish pressure is taking control now. The market needs to come back down, up, down, up to show us that okay, it's on a bullish trend. Instead. So this is how the market goes about doing what? Not respecting our order block. Understand? So we had a minor breakout structure here, our point of interest at this level, which the market didn't respect. And then now you see that okay, the market comes to our point of interest at this level here because of here this breakout structure, grab of liquidity, and then this liquidity level takes out the liquidity, and then boom, we have that push to the upside. Understand? So that's how you go about this guy here. So the market fails to do what? It fails to change its character from being bullish to being bearish. It continues to do what? It continues to be bullish. Understand? So now let's go to this character, this one here, where the market fails to do what? It fails to move from a downtrend to an uptrend. The market fails to move from a downtrend to an uptrend. Look what happens here. So the market comes to this level here. The market is on a bearish trend. It creates lower lows, lower high, and lower low. And then it was supposed to do what? We break lower lows and respect lower highs. It fails to respect this lower high, which means now we are on what? A change of market character. The market might be changing its character. So now the market was supposed, okay, it was supposed to respect this supply here. It fails, gives us a charge. So since what the market gave us a charge, we take this thing as a breakout of structure of an uptrend, a grab of liquidity, a push to the downside to our demand. The market respects our demand and then never breaks our, how do you call this thing, our higher high. You understand? So there's a higher high here. Why? Because of we have the market failed to do what? It failed to respect this. What do you call this thing? Like I'll show you guys the structure of what I'm talking here. It fails to respect. It fails to break that zone there. So since it failed to break that zone, it goes down. Once it goes down, this shows us what? That okay, we are failing. The pressure of the sellers are strong. We are failing to break to the upside. So what does this mean? This means that okay, technically what the market needs to do is that okay, it needs to do what? Since when it broke this level here, this zone is gonna be, because of this is a lower low, this is gonna be a breakout of structure, a grab of liquidity, and then we have this inducement or liquidity level here. The market takes out the liquidity, goes to a point of interest, continue pushing to the downside. So which means now the sellers are in control. With a breakout of structure, we can have that push to the upside to a point of interest and then a drop afterwards. So this is how the market do what? It fails to respect our it fails to respect our change of market character. So now guys, let's go deep now. Let me remove everything and then let's do what? Let's go deep. And let's to talk now. So example. So let's say that okay, the market is currently doing what? The market is currently pushing to the upside. Pushing to the upside nicely, pushing to the upside nicely, creating what? Creating our lower lows, our lower highs, our lower lows, our lower highs. Okay, so now the market is currently here. And then it is supposed to respect this level here, but then it breaks it. So now we can see that okay, the market went up doing what? Creating higher highs, higher highs, higher highs, higher highs, and then a higher high here. So now the market goes down to do what? To create a higher low, higher low, higher low, higher low, and then a higher low. So the market on an uptrend does what? It respects what we call this thing, high lows, and breaks high highs. As you can see that okay, we have what? We have weak supplies. We have weak supplies, weak supply, weak supply, and then weak supply, and then weak supply. We have strong demand, strong demand, strong demand, and then strong demand. So now the market does what? It breaks a higher low, which means now our higher lows are what? Are vulnerable. They are weak now. So once the market breaks this higher low here, since when we know that okay, the market gave us what? A BOS at this level, a breakout structure, that grab of liquidity at the top. So the market is supposed to do what? It is supposed to come to this level here and do what? And then give us our buying opportunities to show us that okay, it's on a strong bullish trend. But then look what the market does. The market breaks that level there. So as the market breaks this level, let me just do this. Once the market breaks this level here, what happens is that okay, it creates what? It creates what you call a charge. It creates change of market character, a possibility of what? Change of market character. So the market breaks this level here. Once it breaks that level, what does it need to do? It needs to go up to do what? It needs to go up to this supply here, because if it failed to respect that demand here. So it taps into our supply and then pushes to the downside. So which means our entry points are expected to be at this level here. Then you take what? You take your sales. This is what is your supply. Which means now sellers are gonna be in control, not buyers. Sellers are gonna be what? They're gonna be in control. So now the market creates what? It creates a breakout structure within the zone here. So we have a BOS within that range then. And then the market needs to do what? The market needs to push to the upside again. It needs to push to the upside again to do what? To respect our lower high. So taps into our lower high and then push to the downside. So technically, this means what? This means that, okay, this guy here, this guy won't be our high anymore. This guy is going to be what? Our lower high. Because of we are switching our trend from this level here to the downside. Our lower high, then we're gonna have another lower high here. So now we're gonna have our what? Our lower low from here, our lower low, our lower low, then our lower low, then we're gonna have a new lower low at this range here. We're gonna have a new lower low at that range then. So which means we're expecting what? A breakout of structure, a grab of liquidity, and then we might have that push to the upside. So this is how you go about what? Understanding the theory behind what? Change of market character. The market failing to do what? The market failing to respect your order block. Understand? Or failing to respect the rules that, okay, we break lows, high highs, and respect lows. Understand? So now the question that you should ask yourself is that, okay, what if the market fails to do this? What if the market fails to do all this? So let's say that, okay, we have this high here. So that high is our high. And then this guy, okay, we say that, okay, he's unconfirmed. Guys, after this session, you need to watch what you call this thing, advanced market structure. I'm gonna go deep in that session. For now, I just want to focus on church. So what happens is that, okay, the market does what? It goes up to respect our what? It goes up to respect our this level here. It respects it and then goes down. Once it goes down, look what it does. It breaks this level here. So once it breaks this level, so we had what? Other block here. We had this other block here that the market respected, but then it didn't fully respect it. So which means now at this level here, what are we having? We're having a break of the market didn't do what? The market didn't respect. The market didn't fully respect our other block. So since the market didn't respect this other block, this means what? This means that, okay, the market will continue pushing on the bullish trend. So it means at this level here, we're expecting what? It's just a continuation. The market will give us what? A breakout of structure, like it has been doing all along. So this guy here won't be considered as a short anymore. It's the breakout of structure, and then since you can see that, okay, we have this liquidity here. So that liquidity, which means the market needs to come and take out the liquidity. And then, which means a breakout of structure, grab of liquidity, we might have an other block here. Market comes to the other block, comes pushing down to the other block, taps into our other block, and then start giving us what? Our buying opportunities afterwards. So this is how you go about understanding the theory behind these things. Okay, if you took a loss here, don't worry. The market will have to come back to a certain level, which that level will be unique also, and then start taking your trades afterwards. So this is how we do everything. So now let's go to a downtrend now. So that, okay, the market is creating something like this, pushing nicely to the downside, and breaking highs, respecting lows, breaking highs, respecting lows, breaking lows and respecting highs. So now the market comes to this level here. It breaks this level, then it's currently there. So let me just say that it's here. So as you can see that, okay, we are currently on what? On our lower lows here. We are currently at our lower lows. Sorry about that. We have our lower lows, and then our lower lows. And then we have what? We have our lower highs here. Our lower highs, our LJ, our lower highs, lower highs, our lower highs, then our lower highs. Let me just make this guy a bit. Our lower highs. Then we have our lower lows here. Okay, the market does what? It breaks, it breaks our lower lows, breaks our lower lows, breaks our lower lows, breaking our lower lows, respecting lower highs, respecting lower highs, respecting lower highs, and then respecting lower highs. Okay, it's fine. But then look what the market does. It breaks, comes to this level here, gives us what? A BOS quality, but then the market breaks this lower high here. It breaks a lower high. So which means now we're gonna have what? We're gonna have a possibility of what? A church. So once we have a church like this, that church can act as a what? As a breakout of structure for the buying pressure that's gonna come. Okay, the market comes to this level here. Then what does it do? It start giving us what? Our buys. So this buy here, it's gonna do what? It's gonna break this level here, which means we're gonna have what? A BOS. We're gonna have a BOS, at the top. So now we're expecting the market to do what? To start giving us what? Buying pressure now. Expecting the market to simply start to do this now. Instead, a breaker of structure, graph of liquidity, point of interest, breaker of structure, BOS, then a BOS here. Which means we're expecting the market to do what? To respect our higher lows now, because if you're on what? You're on an uptrend. We're expecting the market to come and respect these levels here. We're expecting the market to simply come and respect these levels here. So this means that okay, this guy here, he's no longer act as a lower low. He's gonna act as a higher low. And then this guy will be what? This guy will be our first higher high. Could be our first higher high. So he's gonna have a higher high, and then a higher high, which means here you're gonna have what? Our higher low. Sort of like that. Have our higher low, our higher low, our higher low, and then our higher low here. So that's how we switch from what? From a trend to a trend. Here's the breaker of structure, graph of liquidity, point of interest, breaker of structure, graph of liquidity, point of interest. You can see that the market does what? It switches from a downtrend to an uptrend by simply creating this guy here. So this is how this guy can affect the market. So now, let's say that okay, the market doesn't do what we're asking it to do. Say that the market doesn't do what we're asking it to do. So the market is at that level there. So now we are currently thinking that the market is going to do what? Come and respect this level here. But then the market breaks this level. So once the market breaks that level, what does this mean? This means that okay, this level here is going to do what? It's going to continue with the selling pressure. So which means this guy is no longer valid anymore. Understand? This guy is going to be what? So this guy can be our acting lower high now. We're going to have what? We're going to have a BOS here. And then after having this BOS, this means that the market will have to do what? The market will have to go up. The market will have to go up to respect our lower high, and that gives us our selling opportunities afterwards. Which means you're going to take yourself from there, a breaker of structure, a graph of liquidity, a push to your point of interest, and then a drop afterwards. So this is how you go about understanding the theory of failure, change of market character, and the actual change of market character. Understand? So now let's go and talk about I would say the structure of the market. So let's talk about the structure of the market a little bit. So on the structure of the market, I want to focus on some things. Guys, listen, a trend creates a trend. You understand? A trend creates a trend. Which means that again, an uptrend creates a downtrend, and a downtrend creates a downtrend creates an uptrend. Like I said, change of market character means that okay, the market is switching from a trend to trend. You understand? So look at this thing. You have the market pushing up, okay, up, and up. Then let's say it comes here. Look at this thing here. It's an uptrend, right? But then this uptrend here, it has an uptrend that creates a downtrend that creates an uptrend that creates a downtrend, this downtrend that creates an uptrend, and then this downtrend that creates an uptrend. You understand? So let me just label everything here. Just want to show you something. We have our higher highs here. Our higher highs here. Our higher highs here. Then expecting higher highs here. And then now we're gonna have what? We're gonna have our higher lows there. Higher lows there, our higher lows there, and then our higher lows within this level here. So look, we are currently pushing on a bullish trend, right? But then once the market is done creating a higher low, what does it do? It goes down. You understand? Which means here, what are we having? We're having a switch of market character. We are switching from this uptrend to a downtrend. You understand? We are switching from this uptrend to this downtrend. The market goes down. Once the market is done creating a higher low, what does it do? It rises. You understand? Once it rises, what happened? We switched from what? We switched from a downtrend to an uptrend. The market goes up to break a high. Once it breaks a high, it grabs its liquidity. After grabbing its liquidity, it needs to do what? It needs to go down. You understand? To the point of interest. Which means now, for the market to stop pushing to the upside, what does it need? It needs a charge. You understand? So that charge is going to do what? Bring the market to the downside. Once the market goes to the downside, what does it need to do? It needs to go to a point of interest. Once it gets to a point of interest, what does it need to do? Since we are breaking highs and respecting lows, the market needs to respect that low. Once it respects that low, what does this mean? It means that okay, it needs to switch from that selling pressure that it had from creating that higher low. I mean that higher high. From creating that higher low to doing what? To push into the upside to hitting our profit at the new higher high. Which means what does it need? It needs a charge. Instead, we need a charge, which means it's gonna switch from this downside movement to this upside movement. Instead, which means we're switching from a down to an up. The market breaks a high. Once it breaks a high, it creates a higher high, the new higher high. That new higher high was on what? Was on a buying price. For the market to go to a point of interest, it needs what? It needs a charge, which means that charge that is gonna create here, it will need to do what? It will need to bring it down to the point of interest. When it gets to the point of interest, it's gonna change its character and then push to the upside to show us that okay, it's respecting that point of interest. Actually, this thing I'm not about, but then it's fine. So which means we're gonna have something like this. We're gonna have the market going up, creating a charge, going down, creating a charge, going up, creating a charge, going down to your point of interest, creating a charge. And then let me just say that it stops. Let me just say that it creates something like this. So this is the structure I'll talk about here. So we have what? We have the market pushing to the upside, you understand, which means it creates a higher high. So once it creates what? Once it creates this higher high, what does this mean? This means that okay, the market will do what? The market needs to push to the downside to create the high low, right? Okay. What does it do? It goes to the downside, creates high low. This high low was created. You understand? So it's simple. So since what the market went up, it needs to go and create what? A high low. What does it need? It needs a charge. So which means here the market, it will do what? It will create a BOS like normally does. So this is how you're gonna see that okay, you are switching now. It creates a BOS. So it was supposed to come and respect our point of interest at this level here. It fails, which means you're on what? You're on a charge, which means the change of market character. So the market will see doing what? Respecting our order block within this level here, and then pushing to the downside. Now you're gonna see that okay, we are switching from what? From an uptrend to a downtrend. The market gets and creates a low. So the question now that you should ask yourself is that okay, what really forms a high and a low? It's a charge. Instead, that's something that forms a high and low. Instead, for the market to create a low, it needs a charge from a previous high. Instead, which means without this high here, without this change of market character here, we are not gonna have a low at this level here. Without this low, we want to create a higher high. You understand? Which means these guys need one another. You understand? So now the market goes down. Once it goes down, okay, you don't know when the market is gonna stop creating a low, right? You don't know. Okay. You don't know. So you're gonna see how while the market breaks a low, it breaks a low, and then it fails to respect the high. Now you need to be curious that okay, oh, it failed to break a high. It failed to respect the high. What does this mean? It means that okay, it's gonna switch its character from being a downtrend to an uptrend. Instead, it breaks this level here, which means we're expecting it to do what? To come to this level here. We're expecting it to come to this level, respect this level, and then go up. Okay, so which means now the market comes to this level here. What does it do? It creates what? A BOS. You understand? A breakout structure. We need that grab of liquidity. That grab of liquidity is gonna come from what? From a new higher high. So that grab of liquidity is only going to be possible once the market creates a new higher high and then stops it. But again, it stops buying and then it needs to go down now. Grab of liquidity, and then let's say that okay, we have an order block here. We have this order block here at this level. So this is our what? Our order block. This is our order block. Let me not make it huge actually. Let me just make it something small like this. Okay. So which means this guy was what? This guy here, he was mitigated. He was mitigated. So now the market creates this higher high. For this higher high to stop, which means for this buying pressure to stop, it needs to do what? It needs to break the rules. Create a BOS. After creating this BOS, what does it do? It fails to respect this low here. So which means now we are on what? We are on a simple charge. The market goes down to create the charge. Then after creating a charge, what does it do? It goes up to create what? To respect our level here, and then it pushes to the downside. So this is a BOS, grab of liquidity, a push to the downside to our point of interest. So this one I said that okay, the market will do what? It will create the charge at your point of interest. This is what I was talking about. So it's in a way confirmation entry point. If you've watched the video of confirmation entry point, the market comes to your order block. Since it was on a selling pressure, it was on the selling pressure. It needs to do what? To stop the selling pressure and do what? And push to the upside because of what? We break highs and respect high lows. Understand? So now it's a breakout of structure, grab of liquidity, a push to your point of interest. So you're gonna see that okay, the market is gonna do what? It's gonna simply respect your structure by doing what? By breaking a low and then giving us what? A charge at the top. So now we have that grab of liquidity. That's when we see that again. Oh, now the market is done doing what? It's done selling and it's gonna push to the upside, and it's also at our point of interest, which means it's a confirmation to us that okay, we are done with what? We are done with this selling pressure here. We are done with this selling pressure here. You understand? The same thing over and over again. A breakout of structure at this high here. Take profit hit. A breakout of structure at this high. It creates a high. After creating a high, what does it need to do? It needs to go down to your point of interest because of what? We have this breakout of structure here. We have that breakout of structure there. Grab of liquidity and push to the downside. Once it gets to your point of interest, it needs to create what? A change of market character to show us that okay, it's done with the selling pressure. And then now it's gonna do what? Respect our point of interest and then go up. Why? Because of we break highs and respect lows. Sorry about that. Okay, so now let's go to a bullish trend, to a bearish trend. So the market comes to this level here. It creates what? Creates a change of market character. Goes up, creates a change of market character. Then goes down to create what? A change of market character. And goes up to your other block to create a change of market character. Then it goes down. So now look what happens. We have what? We are on a selling pressure. So the market creates what? A breakout of structure. Then the market creates what? A breakout of structure. So when the market creates a breakout of structure like this, what happens afterwards? It fails to respect this high here, which means we have what? We have a charge. Let me just write CH. We have a charge here. So which means within this charge that are we having, the market will do what? The market will need to do what? Come and respect this level here. Let's say that okay, it respects that level. You understand? It goes up to create this correction here. So what does it do? So since it was on an uptrend, it needs to do what? Stop because of it's done creating a what? This is our lower high here. It's done creating what do you call this thing? It's done creating this lower high here. So we have a lower low here. So which means the market is done creating this lower high here. You can see it how once it breaks a low. So we have what? A BOS, and then we have what? Our charge here. Our CH where at the bottom. A change of market character, and then the market does what? The market comes to your point of interest, it respects your point of interest, and then pushes to the downside. Once it pushes to the downside, this low here, it was firstly liquidity, which means a sell side liquidity. Guys, you need to be clever to understand these things because of what I'm saying here from the previous sessions. It creates a change of market cap. What do you call this thing? This low was a liquidity before the market broke it. So once it breaks it, what does it do? It creates a POS. It grabs the liquidity. After grabbing liquidity, what does it need to do? It creates what? A POS to show us that okay, now I'm done selling. I'm gonna go to your point of interest. So it creates what? It creates a charge. It comes to your point of interest at this level. Let's say at this level here. And then look what it does. It goes up to respect your what? To respect your point of interest. Why? Because of what? We have a breakout of structure, a grab of liquidity. So now we have to have a point of interest at this level here. So the market taps into our point of interest. So once it taps into our point of interest, what happens? It creates what? It creates a change of market character. We have a breakout of structure. And then we have what? We have a change of market character here. We have a change of market character at the zone here, which means we're gonna have what? An order block where within this range here. The market taps into order block. So this thing here, like I said, it acts as what? It acts as confirmation to show us that okay, I'm done with this bullish trend here. I need to do what? Push to the downside afterwards. So which means this lower high here, the lower high is going to be created by what? By a charge. You understand? So that charge is also confirmation to your what? To your point of interest because of what? Breakout of structure, change of market character, and then the respect of your point of your lower high or your point of interest. And then the market goes down to do what? To respect, to hit your targets. Your targets are gonna be here. And then which means that zone here is gonna also be what? A POS. The market creates a change of market character. It needs to go up to respect that other block there. That's how the market moves, guys. That's how the market moves. So I guess for this session, I can say that okay, I spoke a lot. I spoke a lot of things. I would say that okay, I'm done for this session. I'm done for this session. Hope you guys learned a lot. Hope you guys saw a lot. And then, yeah, thank you very much. But unless I skip something, okay, I skip something. Okay, I think I'm done. Yeah, thank you, sir.